In this video, I will teach you how to take your $50 to $500 trading only 30 minutes previous highs and 30 minutes previous lows using this approach that I will teach you in this video. So if this is your first time coming across my channel, kindly subscribe to this channel because I will be dropping this type of content every now and then. Let's go. So all you need to do is come to your 30 minutes time frame chart, open your chart and watch out for a previous high break. As I'm pointing to this arrow now, watch out for a break above this high. Okay, let price run above it, take out all the liquidities above this high. Okay, then wait for price to shift from bullish to bearish on a lower time frame. Then you take your sell. So the first thing you have to do is to do your analysis on a 30 minutes time frame. That is number one. And this is your 30 minutes time frame. What do you need to do on 30 minutes time frame? Watch out for a run on liquidity above this high on your 30 minutes time frame. Then the second thing you need to do is to what? Move down to a 1 minute time frame and watch out for what? A shift in market structure. Okay, once there is a shift in market structure like this from bullish to bearish, I'll wait for price to go back to either your breaker block. Okay, we are talking about entry now. Breaker block, let price move down to breaker block, or other block, let price move down to other block, or fair value gap. So these are three places you can use your sell position. Then our third thing to do is to our stop loss. Our stop loss will be above this 1 minute high, this 1 minute time frame, the high here, the high that created this low that shift to market structure. That is where you put your stop loss. Okay, and the fourth one is your take profit. Your take profit will be the 30 minutes time frame order block that created this high, that order block that caused this threat on liquidity, the run on liquidity here. The 30 minutes order block target the liquidity of that 30 minutes order block. So that is your take profit. And section is at what time of the day do we take this trade? So we take this trade at London section and New York section. This is the only time of the day we can do this entry. So all you need to do is to wait for London section to approach, then start watching out for all this that I explained this. So this is for a sell scenario. Then for a buy scenario, you watch for 30 minutes time frame, a trade and a run on this liquidity here. Let price run above it, below it, price can close below it, price can close inside it, but let price do what? Trade below this zone. Once price trade below this zone, we'll now go to 1 minute time frame. Watch out for a shift in market structure towards bullish. Then we'll take our entry using breaker block, order block, and fair value gap, and take our entry. And our stop loss will be below this 1 minute time frame zone, the zone that caused the shift in market structure. And our take profit will be the 30 minutes order block that caused this break. Okay, we'll target the liquidity of that order block, and the session remain London section and the New York section. So let's go to our chart to analyze this trade. We are using GBP USD. So let's see what happened this current week that just closed, which start on the Monday 17th March. That's when this current week that just traded. So Monday 17th March, let's put a bar over it. So this, you can notice that our high was this zone. This is our high. This was where price, the previous high that price created on this 30 minutes time frame. So let's highlight it. Our high on a 30 minutes time frame is here. You can see it. This is our high on a 30 minutes time frame. Okay, this is our high on a 30 minutes time frame, and you can see that price has traded above it. There's a liquidity grab here. Okay, so immediately this price traded above it, that's when we need to move down to 1 minute time frame. But before we move down to 1 minute time frame, let me show you how you can identify your London sessions and New York sessions using an indicator. So let's go to indicator, come to this zone. You see where indicator is written here on your trading view. Click on that place. So let's click on it. You click on your indicator. You see this place, the row slash, section, type section. As you are typing section, you can see what came out here. You see this one, they wrote section, and click on type section. You see this section by Lost Argo, click on it. Okay, so it appears on our chart. Now let's go to setting. Click on the setting. You see setting here. That's where my arrow is pointing, this place. The second icon here, the second icon, you click it, that is setting. Click on the setting. So our New York session start by 1300 GMT plus 1. GMT plus 1. So if it is Nigerian time, it is 2 o'clock. Okay. If it is London time, it is 1300 plus 1 and closes by 1700 plus 1. Okay. So that is our New York session. And our London session start by 07 GMT plus 1 and closes by 11 GMT plus 1. So if it's Nigerian time, this is 8 o'clock. So this is it for that. After setting it, you click OK. You click on OK. And you can see the thing has showed on our chart. Let's hide this thing so that it will not disturb what we are doing here. We'll hide it. So we have set up our session breaker. So the blue one, you can see there are two colors here. This blue color is our London section, while this light pink color is our New York section. Okay, so we have clicked on, we have set up this one. So next thing is, now that price has run above this 30 minutes previous high, okay, we'll now move down to where? We'll now move down to a minute time frame, 1 minute time frame, and London section. So this London section, let me use this and highlight it so that when we go there, we'll see it. So we'll move down to 1 minute time frame now. Let's go. The 1 minute time frame, and you can see, let me remove this. Let me remove this. This is the zone that I've marked. Let me remove it now. And you can see in 1 minute time frame, the price, let's read this price chart, price action together. Remember to adopt your advanced market structure. So let's read it together. We created higher high, a higher low, another higher high, and then a higher low, higher high, equal low, higher high, lower low. So this is where we have a shift in market structure at this zone, because currently we have closed below this zone. Let me mark it so that we see it. Our shift in market structure occurs the time we breach this zone. This is where our shift in market structure occurs. Okay. Now, what next do we have to do is to start looking for entries from this zone down to this zone. So you can use our Fibonacci tool. Let's pull it out. Let's pull our Fibonacci tool. Let's pull out our Fibonacci tool from swing high here to swing low, and swing low ended this place. This is where the swing low ended. They were swing low, and you can see this Fibonacci tool is divided into two. The golden color and the light blue color is divided into two. And at this zone, this golden color is our discount area. We sell at discount price. Sorry, premium zone. We sell at our premium zone. So now let's look at for order block, breaker block, and fair value gap inside this golden zone, because that's where we put our entry. So the breaker block now is this man here. You see this red candle here? This is our breaker block. You extend it. So this is our breaker block. Do you have fair value gap inside this zone? Yes. Where is it? Let me show you the fair value gap. This is the fair value gap. Okay. Now, do you have other block inside this zone? Yes. The block that caused this break is this man here. You see this man is the one that caused this break. These are other block. So there are three possible places we could do this entry. So what I would advise you to normally do is that if you want to risk $100 and you notice that you have three positions that you can take trade, you can put it $30. You can risk $30 at this breaker block, risk $30 at this fair value gap, and risk the remaining $40 at this other block. So this is how our entry goes. Let's bring out our tools, our set tool. This first entry here, and the stop loss will be above this zone. Our stop loss is usually between 5 pips and 10 pips. Our stop loss is above this zone. This one now is giving us about 9 pips stop loss. And our take profit is the 30 minutes order block. Remember, 30 minutes order block, the liquidity of that 30 minutes order block, that's where we'll target. It's somewhere down. It's somewhere down. Let me look for it. Okay, here is it. That's the liquidity. Let me use something and mark it. So this is our target, this zone. This is our target. So let's bring down this. So this is for our first entry, our first risk. Okay, our entry, first risk. So the second entry comes at this fair value gap here. This fair value gap is second entry. We see how this stop loss now is smaller. This one is now giving us about 6 pips stop loss, and we are targeting the same zone, the same 30 minutes liquidity order block. So this one and the third entry is giving us here from this zone. Okay, so the third entry give us higher risk reward ratio. This third entry, let me put it where this one give us small stop loss. This one is giving us about how many? We join 34. This one is giving us about 3 pips stop loss, and it's giving us 1:10 risk reward. You can see it here, 1:10 risk reward. Okay, so this is how we take this entry on your 30 minutes time frame for your analysis and 1 minute time frame for your entry. So let's go back to 30 minutes time frame again and look at it if the thing hits our take profit. So this is 30 minutes time frame. You can see it here that the thing smash our take profit. So this is for a sell scenario. Now for a buy scenario now that the thing hit our take profit, a buy scenario happened the same day on a New York section, because you see this is a previous low. This place our take profit is the previous low. This man here is the previous low, and you can see that price even break and close below it. Okay, and after trading it, let's see what will happen here. Let's go down to 1 minute time frame and see what will happen on this New York section. So let's go back to 1 minute time frame. So this is a 1 minute time frame, and you can see that price, this black line, is the run on the liquidity. This black line is our previous low on 30 minutes time frame, and you can see that price had traded inside it. Okay, so let's read it meaning into this. Let's read this chart together. Advanced market structure, that's what I'm applying here. Starting from this zone, we created a low, a lower high, and another lower low. Immediately we enter this place is where we are, our New York section start. Immediately we enter New York section, we shifted a structure here. There's a shift in market structure here by closing above this zone, our previous lower high. So this is where a shift in market structure happened. Let me highlight it. So let me draw line on it. You can see it because we close above it. So immediately shift to market structure happens here. We'll draw our fib level. From swing low to swing high, we will buy at a discount price. Swing low to swing high. Okay. So all our buy must be inside this golden zone. So what are the possible places we can buy? Let me highlight it. Number one is here. There's a fair value gap here. Our first entry is here, fair value gap. Then the second entry, there's another fair value gap here, which also coincided with this other block. So in this scenario, we are having two entries. Okay. So any amount you want to risk, divide it into two because we are now having two entries here. Any amount you want to risk, divide it into two. Okay. You pick your first entry here and stop loss below this zone. That will be our stop loss below this zone. Just about 10 pips stop loss. 599 and 499 below this zone. This one is 10 pips stop loss. We'll take it. We are targeting the previous high again. We are moving back to where the previous high. Let me see. The previous high, which is somewhere here. This one will give us about 4:7. Then the second entry. Our second entry is on this fair value gap with other block. This is our second entry. We'll hit it here. We'll take it up. Second entry always give us a better risk to reward ratio as usual. So let's put it where. So this is our second entry. So this second entry is giving us about 1:8 risk to reward. So let's go back to 30 minutes time frame. We are going back to 30 minutes time frame to see it clearly. So this is 30 minutes time frame now. Let's look at it. All right. And this is our second entry here. You can see it, you will smash it. I told you that our take profit is usually the other block that cause this run on liquidity. That other block, the liquidity, that's what we'll target. And this entry give us about, the first entry give us about 1:4.7 risk to reward, while the second entry give us about 8:7 risk to reward. Okay. So I want you to go back to your chart and practice what I taught you now. Going forward, let me show you what will happen next week as as market will open on Monday. Now look at this liquidity here. Allow price. Wait for price to come and run on this liquidity. See where I'm pointing. If price run on this liquidity on Monday, what do I mean? If price trades above it, if price trade above this zone on Monday, once you see that price has traded above this zone on Monday, and go back to your 1 minute time frame during London section or New York section and watch out for a shift in market structure on your 1 minute time frame. Once there is a shift in market structure, you place your sell order and take it down. Target this liquidity. See this liquidity here. Target it. Okay. So this is how you trade this entry on Monday. On Monday, if you notice this thing, you trade this zone. You trade this way. Stop loss is above the 1 minute time frame. Okay, and your take profit is this liquidity. This will give you about 7:7 depending on how price reacted on Monday. So this is how you'll be taking these entries. You can trade it on any pair of your choice. So if you like what you have seen so far, kindly subscribe to our YouTube channel. We also have a free Telegram channel where I drop free content. So you can also click on the link and join our free Telegram channel. See you guys in my next episode.